Good morning, everyone. Welcome to today's live stream. So, as you guys know, what we do here is we trade using our trading robot. It's completely automated. We don't get involved with how the robot opens trades, how it closes trades, how it manages its trades. We just let it do its thing. Okay. So, remember, guys, hit that subscribe button, hit that notification bell so that you can be notified whenever we do have our next live stream. We stream every day from Monday to Friday, from 8:30 to 9 and 9:30 to 10. Reason for that, that is the most volatile periods of the market. These days, it's not been very volatile. We've not been getting big moves, and that's why we were in drawdown. But as soon as we get that volatility coming back into the market around 8:30 to 9 and 9:30 to 10, once we have momentum with it, as in price moving in one direction for that 30 minutes, we will be making some serious profits. Okay? It could only take one trade to make up our losses, or maybe two trades to make up our losses. Right now, we've been just entered into a setup. We are in a sell, and let's see how this one goes. Let's see if that was the only trade that opened up. Yes, that's the first trade. First trade of the day is a sell. Let's see if the price goes to the downside, which is what I would like to see. So far, showing signs of a little bit of volatility, but it's not that much. So I'm not banking that this is going to continue to, progress to the downside. We do have possibilities that exist. Let me just open up my Epic pen for you guys. Let me show you guys what the possibilities are. This price could go back to the upside. 1 second. Try to grab my Epic pen so I can draw on the screen for you guys. Okay, got it. Okay, so what possibilities exist? According to the Elliott wave theory, we could have this as 1, this is 2, we come here for 3, and then we come back like this before we go up, if we're going to go up. Okay? That's a possibility right there. So that sell trade was closed and a buy trade was opened. So exactly as I thought, may not have that momentum to continue to the downside, and it did not. So it came back, stopped us out, or should I say flipped from sell to buy, and now we're in a buy trade and the price is pulling back to the downside. So I'm thinking the price is going to pull up, then it's going to push down. So we may be stuck in a range, right? We may end up getting caught up in that range before the price actually breaks out. Let's see how it behaves. Okay? So that's the possibility that I'm looking at. Something like this. So this is going to be part of it as well, right? So this is the internal wave. And this is the impulsive sides. And the price takes off to give us one like this again to the upside. Let's see how it plays out. All we need to do is just watch, just monitor, just see what's happening. We can try to predict what's going to happen next, but we have no control over what's going to happen next. If price was going to be dropping aggressively from this level, I would have expected price to already start making its move to the downside, but it's not doing that. And also, guys, don't forget there is this possibility as well, where it does this, 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 and it starts coming down. Okay, that's also a possibility. With the Elliott wave theory, it's very tricky because the market makers use it to manipulate price. They know that a lot of traders are using the Elliott wave theory, and they will start off these Elliott wave patterns, and then they will change it. So I don't use the Elliott wave theory the way in which I used to, as in try to forecast where the price is going to go and then I'm going to try to trade in that direction. I don't do that anymore. It has proved very difficult at times to use the Elliott wave theory in that way, and I'm an Elliott wave master. So if you watch some of the Elliott wave gurus out there, you'll see that they may forecast price doing a certain thing and it does something completely different, right? It doesn't mean that they're not good at what they do. They're good at forecasting, but the market makers will change these waves up. Sometimes there are waves in the Elliott wave theory called the truncated wave, the X wave. These two types of waves, they use them a lot to trap you, right? So when you're expecting a big wave, they exit or they truncate it. Either make it short or they just don't bring it at all. Okay? So you need to be careful when you're trying to apply the Elliott wave theory. I use it more as a forecasting tool, and I use my liquidity map for trading. My EA, it's designed to just trade on its own. It's designed to be liquid, just follow the price wherever the price goes. We may take on some drawdown, but once the price moves with volatility and momentum in one direction, we make profits. And generally, our profits are going to be way bigger than the losses. Okay, we could lose for a month, and in the space of 2 or 3 wins, we make up all of the losses of the month. So it's okay when we're in drawdown. Sometimes for extended periods, it's okay because we make that up really, really quick. Once we get a nice big extended move, we're able to make that up. So the EA, the way in which I use it is just for trading the most volatile periods of the market. 8:30 to 9, 9:30 to 10. Those are the most volatile parts of the day. If you guys hear any noises in my background, it's raining very, very hard right now. And you guys know that I'm in the sunny island of St. Lucia, so it rains here a lot. I'm in the tropics. Just give me a second. Let me try to close my windows. Alright guys, I'm back. So I've closed my windows, I've closed my doors. It has blocked out most of the sound. Alright guys, we're still pushing. Let's see how this one goes. I'm thinking that there is a possibility that the market makers want to give us like some sort of bigger correction. Let me just put this on the 15-minute time frame, okay? So you guys can see this a little better. So this is possibly one wave, right? And if they give us 1, 2, 3, and then we get this one like that, and they push up, they may be coming for around this level, right? Then that means that they're going to possibly do this, come back like that, maybe even like this, right? And possibly do this, right? So that's a possibility. So we got to look out for that. Now that is according to the Elliott wave theory, okay? This forecast I just did, this is according to the Elliott wave theory. We can use the Elliott wave theory to predict what the price action can do based on what the price action has done, right? But does it mean that it's going to do this exactly as I predicted? I may get lucky and I may get it correct. But if they're going to create a corrective formation, it doesn't have to be this one. There are many different types of corrective formations that the market makers can create. Okay? They can start making this one and then just evolve it into something else. Okay? So you got to be very careful. It's not as simple. The Elliott wave theory is a very good foundation, I would say, for price action. It's a very good foundation to look at when you're looking to trade price action. So for me, the way in which I trade when I trade manually, I just use these accumulative or corrective type formations when they happen at my liquidity map zones. So when they happen at my liquidity map zones, I just try to trend them. I give them some time to develop, and then I try to trend them. So I trend them, and when they break out from that trend, then I would get into that trade and go for the next liquidity map level. So far it's doing pretty much exactly as I described. One up, one down, one up, and possibly coming for another move to the downside, and then maybe going up, then coming down 3 or 5, and then maybe take off to the upside. Even this wave that's coming now, they could still bring this one like that. And that's going to throw everyone off, right? And then they bring it back like that, and then they bring it like this, and then they take the price up again. So many different variations exist. So let's just keep watching. Let's see how this works out. Even this move down that's coming, I mean, we're looking at it right now on 15 minutes, right? But it's actually a 1 minute or 5 minute pattern that's happening, right? This wave that's coming down, it could still stop and just go right back up, just to evolve the formation. And then if that happens, if this happens, if it, remember, it's supposed to be 1, 2, 3, and then come for 4, like that, right? But if that next wave gets cut short, like for example, let's say here, instead of coming down, it goes back up. This could be still the wave that completed this move down, right? They just truncated it. They cut it short. And that throws off a lot of Elliott wave practitioners as well, because you're not seeing that perfect type of movement in price. The price doesn't move in a perfect way. And these are the type of things that we need to be able to see. But when we see price move in such an unexpected fashion, it leaves us to second guess ourselves. And then we're like, is it complete? Is it still one wave to the upside like this? Is it going to be extended? And we start thinking all different types of things. And the market makers know that's exactly what we're going to start thinking like. It's a very big part of the psychology of the market. They do a certain thing because they know you are educated in a certain way, and because of that education you're going to think a certain way and make certain decisions or not make certain decisions or be confused about certain things. And so they're going to work off that confused, indecisive type of thinking. And that's where you're going to start entering trades, placing your stops, doing different things, and they're just going to be collecting liquidity. Especially between 8:30 to 10 o'clock. So around that time, this time, I don't trade manually. Though these days it's been very calm and very kind of slow around 8:30 to 9, 9:30 to 10. So right now, a lot of traders could still trade around this time. I mean, I could trade around this time. There isn't much volatility. I mean, last year, year before, and so on, at this time, the price, if it exploded to the downside, it would be all the way down here already, right? Or explode to the upside, it would be all the way up here already. But right now, we're not getting anything. It's not moving off where it opened, right? It's not really moving off that area. It's just kind of stuck around that area all the time. And what we're looking for is for price to move off that area. And it's not doing that. And that's right now. At 9:30, we get a little bit more volatility in the market, but still, doesn't really go anywhere. All right, so we're just going to wait patiently. We have about 15 minutes left on this time slot. All right, guys. So remember, guys, hit that subscribe button and notification bell. Hit that like button. Remember, guys, anyone who sticks with me until the end of the live stream will get a vacation package. So at the end of the live stream, I'll tell you guys how to get your vacation package, okay? I know a lot of you guys are probably thinking, man, that doesn't sound like it's possible. How could this guy give me a vacation? Try it out. What do you have to lose? Doesn't matter if you've only been on the live stream for 10 minutes. Doesn't matter. Once you're here at the end, when I'm closing off the live stream, and I speak with you in the chat box, tell you what you need to get done, and it's not it's not difficult. It's very simple. It's simple. Make sure that you're a subscriber to the channel. Make sure that you have hit that notification bell, like the video, and send me your information. Send me your email. Simple. Your email must come with a screenshot. Yeah, and that's it. Once I get that information, I will respond to your, I will email you, and I'll email you a voucher or a certificate for that vacation package. All right, so the price is still stagnant, not really going anywhere. Let's see here. We gave up $5.30 on our sell. We're pretty much at break even right now. So we're just waiting for that price to move either to the upside or the downside aggressively. So hit that subscribe button, guys. Hit that notification bell. Give the video a like. Help out the YouTube algorithm. Remember, anyone that stays with me until the end of the live stream, you will get a vacation package. All you need to do is be a subscriber. Hit that notification bell. Like the video. Take a screenshot and send me an email at the end of the live stream. I give you guys enough time to do that. So I may give maybe, let's say, a few minutes, 5 minutes, 10 minutes, however long, to have you complete that action. And once you complete that action, send me your email and it'll be all good. But you must do it at the end of the live stream. Not right now, not in the beginning, at the end of the live stream. Okay, guys? And I know a lot of you guys are thinking, how is he going to be able to give us a vacation package? I am a member of a travel company that does this for as a business, right? So I pay them and they provide me with these vacation packages. All right, guys, so we're waiting patiently, just waiting patiently. All right, so that price is pulling back now. Let's see what it's going to do. This part of the price action right here, this area, that is an area that I can already observe and I can see that it looks very tricky. Like the market makers, they want to create a small range in that area and then possibly push the price up. So that's what I'm seeing. Right now, as an Elliott wave practitioner, we can see what the market makers are plotting. Right now, in some cases, they may show us this, but instead of pushing the price up, they just change it and push the price down, right? But based on what I'm seeing now, it's building for upside. But they can always manipulate that. So if they notice that a lot of buyers start coming into the market, I bet you the price is not going to go up. It's going to go down. Because what are the market makers doing? What is their intentions? Their intentions are to liquidate your positions, to hit your stop losses, right? So if everyone starts to buy, the price is not going to go down because liquidity will be to the downside. So they'll go down, collect that liquidity before they go up if they intend it to go up. Okay? So remember, I told you guys that, let me just clear this. I told you guys that this is 1, and this is going to be 1, 2, 3, and then we get one more down like this, right? That's what I showed you guys was possibly going to happen, and then price may just take off to the upside. However, if the market makers notice that in this accumulation, everyone is trying to now sell, the price is not going to go down. It's going to go up. So that's why they're possibly building this type of formation like that. So instead of pushing it down, and they will always leave room to push it down. But this is just that area where they're going to accumulate the buyers and sellers. And then whichever side accumulates the most, if it's going to be more sellers or more buyers, then that will be the direction that they go. So if there is more sellers in the market, price will go up. If there is more buyers in the market, the price will go down. Understand? Because if everyone's buying around this level, their stops are going to be here, maybe even here, right? So they're going to go down, try to collect that liquidity before they go up. And as you can see, they will be in line with the pattern formation that I outlined here, right? For upside. So understanding the Elliott wave theory is very important. Yes, it's very important so that you can understand, what you can expect from price action. However, just trading solely based off the Elliott wave theory is not necessarily going to make you rich. I'll leave it like that. If you pick and choose certain types of setups, then okay, you may see a lot of success doing that if you pick and choose. But if you approach the market on a daily basis expecting the elite wave theory to work like magic, it's not always going to work out that way. You're always going to get some trades wrong, and maybe you get so many trades wrong that it starts to bleed your account. So what I do is I use my liquidity map and my EA. So my EA goes wherever the price goes. So if the price is not really going anywhere, then in those periods I'll be taking on some losses, right? Because it's just stagnant. Like right now, it's just stagnant, and it caused me to take on $5.30 in loss, right? Because it wasn't really going anywhere. It opened a sell trade, then it went up. It closed out the sell trade, opened a buy trade, and now the price is pushing a little bit more to the upside, but the market makers may just push it back down. So we'll see how it goes, right? If they push it back down, then I lose that buy trade, and then I'll have to be entered into another sell, and so on and so on. And if it continues chopping around, then I end up taking on losses. But whenever the price does give me that big explosion that I'm looking for, I make those losses up. Maybe in one trade or two trades, I'm good. All right, so pushing up, see how that formation changed? They can still bring it back, because this could still be one wave and they bring it right back to the downside. So they're always leaving room to evolve the price, to stay within the, how can I say, stay within the theory. Let's just put it that way, to stay within the theory. So to not make the theory seem wrong or invalid. Okay? So they're always going to stay within the theory. Whereas with me, I will use the Elliott wave theory, but I will also use trend lines. Right? So that's how I would trade this. So when it broke out of the trend line, this is where I would be looking for my next buy if I'm trading manually, okay? But then I would only trade this to my next liquidity map area, because once they hit that area, they may bring the price down again. According to what I have, they have already taken the liquidity B zone level, which is around here. So then there's a possibility they actually push the price higher, right? But don't forget, there is still room to manipulate this price, because they're still inside of, you see, this is 1, this is 2, this is 3, right? This wave, possibility to come back here, right? So they just made this entire thing a little bit more flat. That's all they did. Just make it a little bit more flat. So the room for trapping buyers still exists. They can still push the price back to the downside and then push it back to the upside. So if they trap the buyers, bring it down, liquidate them, the sellers are going to jump in. Sellers jump in, bring it back, liquidate the sellers above these levels, right? Because that's where the stops are going to be placed. So if we don't have a lot of buyers in the market, if we have more sellers right now, the price will keep going up once there is more sellers in the market, because they want to get to this level to take out those sellers. So there's liquidity here. They took this one already, and now they have this one that they're going for. They took this one, most likely. I think they took that one already, and they're going to try to get these levels if there is more sellers in the market. If there is more buyers in the market, the price is not going to go up. It's going to go right back to the downside, push back to this level, maybe even push lower, because they can manipulate this third wave. So we always have to be careful. All right, so we got like 1 minute and a half left on this candle. If it closes around that level, we wouldn't be taking on a loss. We'll actually be making a small profit, because remember, we only gave up like $5.30 trying to catch this move to the upside, right? So if it continues going up, great. If it does not, by the time that the time expires, it's not going to be a problem. We will still make a little profit on that move. The price hardly went anywhere, right? So guys, remember, hit that subscribe button, hit that notification bell, and hit that like button. Help out the YouTube algorithm, okay? If you hit that notification bell, whenever we do post our next live stream, you will be notified. Remember, this is completely automated trading, guys. Completely automated trading. We're not getting involved. We're just letting the EA do its thing completely on autopilot. We're not intervening to close out trades. We're not intervening to enter trades. We're not managing trades. All I'm doing is forecasting what the possibilities can be, right? And I'm just forecasting that on the chart. So our time is about to expire on this trade. We have about 20 seconds left on this trade. After that time expires at 9 o'clock, that trade will close by itself. Okay, so there's many different types of exit conditions set in the EA to close out the trades. So it's based on distance. We have time. We have overbought, oversold type conditions. We have many exit conditions programmed into it. Right now, we're not using all of those exit conditions. We're just using the time exit and distance, along with overbought, oversold, right? So the others, we're not using it. So remember, guys, hit that subscribe button, hit that notification bell, hit that like button as well. So that trade has closed. This segment of trading is done. I'll be back at 9:30 to 10 a.m. Eastern Standard. We have someone with me still. That's good. Let me know in the chat box that you're still with me so that I can let you know how to get your vacation package. So we made $13.20 on that last trade. So we walked away with $7.90, right? Simple, nice and easy. However, this is small money. On the days when the price actually moves, we could be walking away with $200, $300. All right, so no one is with me at this time. All right, guys, remember, stick with me till the end of the live stream. Let me know that you're with me in the chat box, and I will let you know how to get your vacation package. Thank you guys so much. I'll see you guys next time. Bye-bye for now. I'll be back at 9:30.